Hello and welcome to another Week Ahead interview where we look at which financial events and data releases have the potential to shake up currency markets. Joining me down the line to discuss is Manuel Maleki, Senior Economist from ING. So firstly, Manuel, what is your take on market behaviour at present and what have been the biggest factors affecting it?
I think the market is stressed by the macroeconomic situation because we have a lot of issues on the macro side. For example, in Eurozone, we have the crisis, and the crisis is not resolved, and it's clear that Spain and Greece will fail to reach their forecast. And moreover, on a global point of view, China is suffering, and in the United States, we have the question of the fiscal cliff and its impact on the American economy. That's why the situation is quite tricky.
The economic calendar is full of influential data releases such as US retail sales figures today and inflation reports from the UK later. But what events in particular will you be keeping an eye out for this week?
Well, I think this week we have some financial events, but the most important thing is more the political events. For example, we have the American elections, and the is now closed. That's why it's very important to have a clear view on the economic side of the candidates' platforms. And at the same time, in Europe, we have at the end of the week the meeting of the Eurozone members, and we want to have some views on the Greece situation and the Spain bailout and what is the next step for the integration. That's why it's a very important week for the Eurozone and for the global economy.
The German ZEW survey is coming out this week. Last week, Bundesbank forecasted stagnation in the fourth quarter, but what are you expecting from this data and for Europe's largest economy?
Well, about Germany, I think that Germany was is still the most important economy in Europe, in the Eurozone, and we expect nearly the same value for the ZEW at the last time, around 12, and we think the economic sentiment should be better around -12. But even if Germany is still the growth engine in Eurozone, the situation is more difficult because the global economy is slowing down, and even now we think that Germany could reach 0.8% of GDP growth in 2012 and 1% in 2013. And it's important to analyze the election in 2013.
With disappointing data from China over the weekend, which is bound to weigh heavily on the global economy, where would you recommend traders put their money in these uncertain economic times?
Well, it's a very tricky question because it's not easy to give a clear answer with the economic situation. But I think it's possible to find the right balance between risk and yield. In particular, in emerging markets, you could find some opportunities in Turkey, for example, or even in other markets, for example, in Australia or Canada. Even if it's commodities country, you can find some good opportunities, I think.
The euro-dollar has been trading around the 1.29 range, but how do you think these events that we've just discussed will affect this pair moving forward?
Well, it's clear that if the Eurozone continue to show a lot of economic and political weaknesses, the euro could be under pressure and it could have a negative impact on the euro. But we don't expect in the short term a sharp decline. We think that the euro could move between 1.25 and 1.30, and we think that the floor is 1.20. But it depends also of the situation in United States and the impact of the quantitative easing. But this is our expectations.
Manuel, thank you for your perspective. Sadly, that's all we've got time for at the moment, but click back to Dukascopy for an interview with my colleague Thomas Taplin looking at the market's reaction to those retail figures from the US. Bye for now.